Hi, my name is Rita Trichur. I'm a business columnist with the Globe and Mail here in Toronto. I'll be talking about the circular economy from a financial services perspective. While the issue of climate change is certainly not new, I would say the concept of a circular economy is still a relatively novel concept for the financial services industry. At this present time, there's no comprehensive roadmap for banks, insurance companies, or institutional investors. And I would say that policymakers and regulators are still trying to wrap their heads around what climate change means for banks, the risk that it poses to the entire system, and the types of solutions that they're going to need to employ. Given the economic crisis created by this COVID-19 pandemic, I would expect that this process is going to take many more years. Perhaps the biggest challenge, though, is that many in the financial services industry still consider climate change to strictly be an environmental issue. Obviously, it's a business issue too. Increasingly, it is about smart risk management, it is about corporate governance, and it's about economic growth. One aspect of the circular economy is sustainable finance, and some Canadian banks have set targets. But there have been some snags. National Bank of Canada, for instance, has talked about how it's had trouble finding enough renewable energy projects in Canada to finance. So it's decided to finance more of these projects in the United States and Europe. Investment banks have also been issuing green bonds, but there are still lingering concerns about greenwashing, basically that it's a marketing gimmick, basically slapping a green label on regular debt. But other developments, I would say, have raised the bar on green financing in Canada. For instance, Bank of Montreal issued Canada's first sustainably linked loan to Maple Leaf Foods in the last year. And normally corporate credit lines or credit facilities are structured in such a way that they come with a fixed interest rate. This was different because it gave Maple Leaf Foods the ability to lower its interest rate by hitting specific targets such as electricity use, water use, or reducing its emissions. Canada, though, in the big picture, is still a bit player with respect to green finance. But there are steps that Ottawa can take to improve Canada's ability to compete. So this is a perpetual ask of mine, and it's that we create a national securities regulator in Canada. It's good for a number of reasons, but I would say that one of the benefits here is that it would improve the efficiency of Canada's green bond market. The other thing it would do is it would look at the issue of climate change from a systemic risk perspective, which is something that we really need to do. A national securities regulator could also create a common set of rules with respect to climate change disclosures for publicly traded companies. At present, these disclosures are made on a volunteer basis. Canada could also create financial incentives, such as offering tax deductions to encourage ordinary Canadians to invest in green projects through their RRSPs. But Canada also needs to create clearer standards for what we consider to be green or sustainable when it comes to investments. And ordinary investors also need to have more choices. We need to have more choices as to where to put our money. There are currently some low carbon funds and environmentally themed investments, but climate-friendly funds may not always include Canadian stocks. And that could be a roadblock for some investors because investing in the home market is important to some people. Regulators will also need to make sure that Canadians aren't being gouged on fees when it comes to these green investments. Progress on all of these issues is likely to be delayed because of the current economic crisis. Banks are bracing for loan losses. This is going to be an issue that could impact their ability to offer sustainable financing. And although Canada's banking regulator does not dictate business decisions to the banks, it does monitor credit risk. Small business loans, including providing funding for clean tech startups, are generally considered more risky because most new businesses fail. And the other major issue is that Canadian banks are also major lenders to the oil sands. It's simply not in the bank's interest to abandon the oil sands. And it is in their interest to support new pipeline projects that will allow energy companies to ship crude to new markets and to remain profitable. There are also other obstacles. We're going to have to rethink and get creative when it comes to bank financing for electric vehicles. So right now, banking regulators are concerned about longer term auto loans that span 6, 7, or 8 years, because ultimately we're talking about a depreciating asset. So at the end of the day, an electric car too is a depreciating asset, and household debt is a major risk to the financial system. Green financing only works if it is pragmatic for banks. It has to stand up to normal lending standards to be really sustainable without introducing undue risk. It is really dangerous to politicize banking. And we've seen this happen in Europe, where very recently banking regulators and politicians have had a dust up over the capital rules for green loans. Some of the politicians have wanted to relax capital standards to encourage green investments in Europe, but the banking regulators have pushed back, saying that basically these capital rules should reflect the amount of risk that banks take. Now, that same logic does hold true in Canada. I don't believe that we should be mucking around with risk weights, but that doesn't mean that these challenges that face the industry are insurmountable. We just need, as I said earlier, to get creative and to look at this in a new way. We need more lateral thinking about this in the financial services industry, because it has a role to play in the circular economy. And we absolutely need buy-in from Bay Street to meet our climate goals, because we really cannot afford the risk of inaction on climate change. Thank you.